What a crazy week on the crypto markets. This is one of the craziest weeks of the year following the lunar collapse. And just before we get started with this video, I just want to say my heart goes out to anyone that had their funds stuck in FTX and was not able to retrieve those funds. I know it's a truly dark time in crypto. If you do want to reach out, any of you, you can DM me on Twitter. I'm doing my best to keep up with all the DMs. It's kind of a crazy time. And, you know, everyone's kind of in a state of panic at the moment. But I do want to say my DMs are open if you are going through a tough time. And I'll do my best to respond to as many of you as possible. It's been a crazy week. I mean, I've been at the conference in Lisbon for Solana. The first day of the conference, everything was going well. Spirits were up. Solana was pumping following the Google Cloud news. And then obviously just a day later, we went to London, where I am at the moment. We went to token 2049. And that was the day when all this FTX drama started to unfold. How things have changed in the last 3 days. I mean, what a crazy 3 days in crypto. Just like 4 days ago, it wouldn't even have been imaginable that we would have ended up where we are today, but here we are. And in today's show, I do want to talk about the ramifications of what went down with this FTX collapse and what my strategy is going forward, and kind of assessing what could potentially be next. What are the ramifications for crypto as a whole? So I won't bore you too much with the details because most of you know by now what actually went down, but I will do a small recap before we get into what I think is going to happen next. And we have to recap by the recent news that Sam did file for Chapter 11 bankruptcy for both FTX, FTX US, and Alameda Research. So they will be winding down. They've entered bankruptcy. This is going to be a long and drawn-out process. We saw how long the process was for Celsius, for Voyager, etc. I expect this to be the same. This is probably a multi-year drawn-out process now that they reached bankruptcy and weren't able to finalize a deal with Binance. CZ played his card very interestingly. I guess he did use this as an opportunistic time to take down one of his major competitors. Tried to make the deal happen. Obviously, they couldn't make it happen after it was revealed that there was almost a $10 billion hole, which honestly, I'm just shocked. I'm mind blown that this could ever be allowed to happen in crypto and that the hole was this deep. I do feel a little bit betrayed. I'm sure a lot of you feel betrayed as well. And I do feel like this has degraded a lot of trust in the space, but now it is official that FTX is filing for bankruptcy. Elio Trades came out and echoed a sentiment that I would largely agree with. And he said to SBF directly, "You've hurt more people than almost anyone in financial history, but what's worse, your crimes may trigger horrific legislation that may block the innovative financial services from reaching those who need it most. From the bottom of my heart, F you." And to be honest, he's kind of right, because the crimes of FBF certainly have triggered what I would say is accelerated regulation. Although we knew regulation was coming, I think now the regulators will certainly clamp down on crypto much harder than previously anticipated. And although regulation is definitely needed, this proves that it is needed. It would be unfortunate if the regulators go after the innocent parts of crypto that we do need, for example, DeFi. And that's one of the major threats I think this FTX collapse has had on the entire industry as a whole. So I do echo Elio Trade's statement here. I do feel extremely betrayed by SBF. I don't know how this could possibly be allowed to happen, but I guess as investors, we just have to take new information as it comes and make the best of the situation and use the current information to alter our investment thesis going forward. And that's exactly what in today's show I am aiming to do. Now, I did keep you guys updated throughout the week. I haven't been streaming like crazy over the last few days due to how just busy I've been with the conference, but I did want to keep you guys updated. And as you guys know, I was doing that on Twitter. I gave you guys a whole running commentary of what actually went down with the crisis. Essentially, just to give you a TLDR, FTX essentially was insolvent, so they weren't able to cover the bank run that did occur. Obviously, CZ did that tweet, BitBoy did that tweet, and then a whole Twitter storm of FUD started to hit FTX, which ended up a lot of it actually being correct, which resulted in a bank run. So people were trying to withdraw funds, and they were very illiquid. They were over leveraged with their FTT token. They were putting their token up as collateral, leveraging more tokens. And since Alameda was so intertwined with FTX, that eventually led to insolvency, which resulted in a collapse because they weren't able to pay out the amount of withdrawals that people were trying to withdraw. So that's essentially the TLDR. A lot of this did happen in terms of sentiment. I do think SBF turned a lot of the crypto world against himself with a lot of this regulatory stuff with the bill he was trying to pass, and then some of the dodgy stuff that started to come out as more and more news came out. The FUD against FTX grew, and that did result in a bank run. But we know from the very beginning that he was a dodgy actor. Now we know that there were skeletons in the closet at FTX. He was hiding a major secret here, and although he came out and said that he didn't know and it was a mistake and that he's sorry. I don't believe a word this guy says at this point. I think he was totally cognizant of what was actually occurring at FTX. And it's a real shame because he essentially now is one of the greatest scammers in financial history and in crypto history as well. And yeah, I did update you guys on my Twitter with the entire story. We obviously had CZ trying to come in, bail him out. I don't think that bailout was ever going to happen because it was just an LOI after the letter of intent or interest was processed. Then eventually they did withdraw from the deal. As per the terms of the LOI, Binance could withdraw at any time. They pulled out of the deal, and then essentially they led FTX to their only next solution, which was to file for bankruptcy. And that's what happened there. So now I want to have a look at some of the ramifications now, because we all know what happened. And I'm sure you guys are sick of hearing what actually happened with FTX. And you guys are probably interested to know, maybe just get a little more insight into what I do think this means for the future of the space. And I do want to cover that in today's video and look at some of the major ramifications. I think the first one we have to look at is the exposure that FTX and Alameda did have to the crypto ecosystem. I think this introduces systemic risk to crypto because Alameda and FTX were large holders of some of the biggest tokens in crypto, the biggest ecosystems in crypto. Obviously, as a result of them filing for bankruptcy, a lot of these tokens, they do have a lot of liquid tokens and illiquid tokens that are set to hit the market because they will essentially be forced to sell in instances where they need to pay out creditors. This will result in some token supply hitting the market. And if we do look at their portfolio to kind of gauge what tokens could be exposed to some of this fallout, we can see that they actually had a lot of exposure here. They were basically invested in a lot of the DeFi market, a lot of NFTs and games, a lot of data and analytics companies, trading platforms, and Web3 platforms. They had their hands in many different industries inside the crypto ecosystem, and most notably Solana and Lido and some of these other ecosystems that they had significant exposure to have been hit quite heavily over the last few days as people kind of preempt a sell-off here. Now, I do think in Solana's case, the whole unlock thing was kind of preempted by the market. That's why we did see that major Sol sell-off. However, there are other ecosystems here which may face a little bit of an uncertain future. Now, not just because the tokens listed in this list doesn't mean necessarily it'll be dumped, because something, let's say a Phantom, which is on this list, it doesn't mean that they were necessarily heavy investors. We know Alameda wasn't a direct backer of Phantom, but they may have had exposure to the tokens by holding it in their portfolio. So in some cases, the market will easily absorb this sell pressure. So I don't think this is necessarily in every case a huge red flag. However, it is important to note that there will be a fallout and there will be contagion. And this contagion, like we saw with Luna, can easily spread to other facets of crypto. We already saw BlockFi go under today as a result of FTX filing for bankruptcy. We're already seeing some of the other funds that have exposure to FTX starting to issue statements. If we look at some of the companies that have exposure to FTX, we know that Galaxy Digital, Multicoin, Sequoia Capital, they all have some kind of exposure to the exchange. There's other companies that have exposure. Crypto.com had $10 million in capital exposed. That's essentially an immaterial exposure to the FTX situation. But yeah, Galaxy Digital, Kraken holds FTT. So many other major hedge funds, crypto exchanges did have exposure to FTX. And that is one of the things we do have to look out for as this contagion maybe starts to spread, not only results in maybe hurting some of these tokens, but also hurting some of the underlying companies that had exposure to FTX. Now, I wanted to point out something very interesting that CZ said in his tweet. He said that they didn't view FTX going down as a win for us. So in a way, you could definitely argue it's a win because Binance did knock off one of their major competitors. And I would say that's part of the reason why CZ did issue that initial warning against FTX, or that statement that they were selling some of their FTT tokens. However, he does put out three very interesting points here. One, that user confidence is severely shaken, which I would agree with. I mean, a lot of crypto participants now, they've had to go through the heartbreak of Luna. They've had to go through the heartbreak of Celsius, Voyager. Some people even way back went through the heartbreak of Mt. Gox. Now people are going through the heartbreak of the fallout of FTX. So I do think it hits user confidence. I think retail in the long run is a small-ish market though, compared to the institutional inflow that could come into this market. But one would have to make the argument that institutions now have to be extremely wary of investing in crypto, Kevin O'Leary, one major investor that started to get interested in crypto, he said that FTX was one of the safest exchanges that he was comfortable putting his money in, and we saw what happened to that. I mean, that essentially ended up failing him, and many other institutions that did have exposure to FTX and trusted FTX, they'll be severely shaken by this event. And a lot of institutions that had crypto exposure, I do expect their conviction to be tested here, and that's kind of why I do expect this whole FTX downfall to possibly have multi-year ramifications on the space. I don't think this is something we recover from quickly. When I say recover, I'm not necessarily just talking about price. I'm talking on the sentiment of the industry as a whole. Of course, price can recover independently of that. It certainly doesn't aid it, but it can. And I do think institutions will be shaken by some of the headwinds that they're now facing. So regulators will now scrutinize exchanges even more. We know that the regulator is going to crack down hard as a result of this, and licenses around the globe will be harder to get for new exchanges, for financial traders, for institutional traders in the space. It becomes a lot harder now that the regulators are going to clamp down. But interestingly, I mean, if we look at all the downfalls this year, if we look at the Luna collapse, if we look at the Celsius collapse with Alex Mashinsky, all those problems can be linked to centralization. All those problems can be linked to human greed. Now, the entire essence of crypto is to be decentralized. The entire essence of crypto is to remove human greed and have a technology, an immutable technology, a permissionless technology, which can operate independently of centralization. Unfortunately, though, when the regulators regulate crypto, they're just going to attack the technology as a whole. They're not going to look at necessarily the human greed factor. They're not going to necessarily look at how centralization, like the CeFi component of crypto, ended up causing a lot of these issues. They're just going to look at blockchain as a whole, and they're going to rubber stamp regulation on crypto as an entire underlying basket, and not necessarily just the CeFi part of crypto. And this is the really sad part of this situation. It's that regulation does likely attack the tech itself. And DeFi is one of the things throughout this entire situation that actually held up. I mean, even though CeFi wasn't processing withdrawals, Aave was still working. We had immutable protocols that were still operating. We had Uniswap still working, Curve still working. I mean, GNS, GMX, they're still trading. People don't have issues withdrawing from them. So DeFi worked amongst this entire carnage. DeFi continues to work. Unfortunately, though, when you regulate crypto, they tend to they'll, in my opinion, will go after some of the protocols which are innocent in this situation. So human greed, it's kind of a shame, is really what caused this situation. And it's also what causes much of the carnage in traditional finance as well. I mean, this type of behavior runs rampant in traditional finance. And that's just human nature. Humans are greedy at times when they see dollar signs. And this is exactly what has occurred now, and what occurred with most of the other big unravelings in the traditional space as well. So it's definitely a shame, but human greed did get the best of us here. And that's why I do think, although a regulation could hit DeFi here, it does emphasize that genuine need for DeFi, for permissionless protocols, for transparent protocols that genuinely can operate irrespective of market conditions, irrespective of centralization. They are still operating. They're immutable. They're permissionless. You don't need permission to use them. And that is what makes DeFi so special. So although the regulators may clamp down, at the same time, I do think this does emphasize the fundamental need for DeFi more than ever. So there's a few things we can take from this. I do think, firstly, we do have to genuinely start looking at some of those protocols that could benefit, I guess, from FTX's users leaving the platform. Many users now will be scarred from using CeFi, although Binance is still operating, although you've got KuCoin, great exchanges that are still operating. A lot of users will be scarred, and they're going to turn to applications which are on the blockchain and are decentralized because they don't trust these centralized exchanges. Same with institutions. I do think we do see significant inflows into the DeFi sector in the future. The regulatory question is a major question mark. We can't deny that. We do have to just see how this evolves, but we can't necessarily make decisions based on regulation now because it hasn't happened yet. So all we can look at is the information in front of us and make our best guess as to how the space evolves. And for me, I do think we evolve into more of a DeFi landscape, which I guess is a good thing and a bad thing. I mean, if FTX was going to collapse either way, I guess you want it to happen sooner rather than later. Of course, it's shocking that it happened, and a lot of us feel betrayed. But the sooner it happens, the quicker we can move towards this vision. And that was the entire vision of crypto to begin with. We got into crypto, of course, to make money, but also because I think a lot of us have a common belief that decentralization is genuinely something that's needed in society, and genuinely can offer immense benefits in terms of offering faster payments, offering faster solutions to swap and send money elsewhere. And that's one of the major reasons why we are huge crypto fans and huge crypto enthusiasts, beyond just the aspect of being able to make quick money in this. So I do think that this is a perfect segue into the sponsor of the show, DeFiChain, because they do offer decentralized finance for Bitcoin. So if you have Bitcoin sitting in your wallet and you don't want to put it into a centralized exchange, which now obviously I wouldn't recommend at all, then you can hold it on your private wallet. Open a private wallet with DeFiChain and actually stake your Bitcoin in a DeFi protocol, because essentially they're not taking your Bitcoin as a custodial asset. They are staking it into pools. You get to retain that asset in your wallet. You have permission over that wallet. So something like a DeFiChain now, I think, is a very valid application to use. And I think the validity of these DeFi protocols has increased. And I think users will flock to some of these ecosystems. So thanks to the sponsor of the show, DeFiChain, it makes sense now, funnily enough, to actually utilize some of these protocols, especially if you're holding Bitcoin, because you want to keep access over your own assets and control over your own assets. So moving on from that, I think we got to look now at some of the protocols that can benefit. Okay, maybe the benefits won't be soon, but it's our job as investors to identify the protocols which can genuinely take advantage of a new influx of users, but also take advantage of how this landscape progresses. And it's my personal duty, or at least it's my personal mission, to find these projects that can do huge multiples next cycle and share them with you guys, and also pick the protocols which I think have the strongest narratives in terms of relative strength to the rest of the market. So in today's show, I'll just share a couple of them with you guys, where I think the space could potentially be headed off the back of this FTX situation, and kind of go through my strategy a little bit as to how I'm playing this as an investor. So Alpha Seeker, I believe, did an interesting tweet. He said there are some cheap crypto assets right now. Buy when others are fearful. I'm not sure when the bottom is in, but DCAing into DeFi projects that fits the next narrative could be a good idea. So the first thing I just want to say is I see a lot of people on Twitter trying to pick the bottom right now. I'm seeing like even Alex Becker, like I do like some of Alex's work, but he's constantly saying like he's waiting for this major financial collapse. He's going to try and pinpoint the bottom. He'll invest when he sees risk reward is optimal. And I do think that strategy can work for many investors, but I do think he and many others might slightly be overestimating their capabilities at actually picking a bottom, and picking a generational bottom at that. It's a lot harder than it looks. So people kind of waiting on the sidelines and waiting for this magic bottom sign and then getting in on the next wave up and the next confirmation. It sounds great. It's a fairy tale situation, but I actually don't think it's that effective in practice. And of course, you have to outline the strategy that most best suits your needs and your financial goals. But for me, I've always stuck to the DCA approach, and that is the only way that I personally think with my temperament that I can achieve massive multiples next cycle. It's identifying these genuine 50 to 100x projects, DCAing into them, obviously going more aggressive when the market's capitulating, obviously taking profits when the market's pumping, but maintaining some kind of exposure to the market. And I do think that an investment strategy like this can be advantageous. So I did tweet just before and I said, come up with an investment strategy that protects you during times of downside, but gives you ample exposure to upside. So I don't believe that being completely out of the market at any given time is smart, at least for my financial goals, because I want exposure to upside. But at the same time, I always do keep enough capital sidelined or in safer assets like stocks, Bitcoin, and Ethereum. Maybe you can bundle into that category as well, maybe with a slightly riskier risk profile, and to take advantage of opportunities. So I do think that we should be keeping capital sidelined to take advantage of new opportunities, but also having some exposure to the market. And that's just how I play it as an investor. So yeah, you guys can try and pick the bottom if you want, but I just don't think it's possible. And I do think it's an illusion. A lot of the industry is under that we can actually successfully, accurately pick a bottom, because I don't think it's true. And oftentimes you'll just end up being sidelined in that case. At the same time though, given how the FTX situation has set the space back a little bit, I do think the rush to accumulate maybe isn't there. To be completely honest, I'll be transparent. This is my genuine thoughts. I think if FTX had never collapsed, right now, crypto could be close to Bitcoin could be close to $25,000. And I do think this would have caused a massive mini bull run amongst altcoins. My reason for this is that CPI data did come in at 7.8%, way lower than the 8.3% expectation. So inflation is finally trending down. Even core inflation is finally trending down. We saw a 7% response in the NASDAQ off the back of that. So it's unfortunate because this FTX situation happened just at a time when the macro conditions were slightly easing. Now, of course, they can get worse again, but if we look from a temporary perspective and look at opportunities to maybe take some profits out of this market, that would have been an opportunistic time. Of course, it doesn't matter now, but I think it just does frame kind of just how quickly this market can change and evolve. And if the FTX thing didn't happen, we could be in a very different situation right now. Regardless, we're not. And we have to make the most of it because it is going to present us opportunities that otherwise we may not be getting. And in times like these, in times of fear, this is when you do get some of the best opportunities. You just need to make sure your plan can sustain over a long period of time, because I know a lot of you guys and even myself in the past have made the mistake of putting all my available capital into the market and not having enough sideline to continue with DCA structure. And that is a mistake a lot of people make. So right now, and I've been saying this for months and months and months, you have to prioritize income. You have to prioritize cash flow in and outside of crypto to enable you to take advantage of these lower prices, because waiting for this next bull run is not a valid strategy. We have to be active here in setting up our portfolios for the next run, and you're going to regret it if you don't, in my opinion. Now, sure, the time horizon may be pushed back slightly from FTX, but I don't think the destination's changed. The road certainly has changed. It's become rockier. There may be some regulatory headwinds here, and there very well may be some cascading effects in terms of the contagion that spreads from this FTX collapse. But the destination has not changed. The need for crypto has not changed. And fundamentally, the market hasn't changed in the overall end point that I think we're going to reach. Maybe it's changed in terms of the way we get there, and maybe it looks a little bit more rocky now. So I do think there will be a shift towards some of these DeFi protocols. And I think this is the next narrative to look at. I mean, look at gTrade, for example. This is Gains Network, GNS. You also have products like GMX. These are immutable. These are operating. These are permissionless. They're operating transparently on the blockchain no matter what happens. And although they can experience liquidity issues in times of volatility, you were able to trade on these platforms throughout this entire debacle, and they don't hold your funds. You'll always be able to get your funds out of gTrade because it's connected to your wallet and you have permission over those assets. So protocols like Gains Network, GMX, and some of the major DeFi protocols, Aave, Compound, etc., given the fact that people don't trust CeFi, I do think that it is a possibility that these protocols do see an influx in users eventually. Now, it might not happen now because a lot of people are slightly disillusioned with the space, but that trend may play out over the next 6 to 12 months. And not just may, I think it will, because it highlights the exact need for these protocols. And my approach to the entire debacle was to start accumulating some of these protocols. So during that massive crash, the first big leg down, we got to 15.5K at the time of recording this video. Guys, remember, I'm not live because I am in London. I'm recording this only 2 hours before it goes live, though, so it's relatively live, but Bitcoin's like 16.5. I bought it 15.5. But I didn't buy Bitcoin. I bought Ethereum. I just believe if we look at the risk-reward profile of the market caps, it does make sense from a risk perspective to invest in Ethereum, because you look at Bitcoin, it won't generally do huge multiples next cycle. And then we go down the list, and after Ethereum, it becomes very hard to determine what is and isn't a good project. Like, you've got great projects like Matic, you've got fantastic projects like Cosmos, but the problem is there's a huge divide in quality, users, and development between Ethereum and the next best L1 or L2. So I did buy more ETH because it does fit that risk-reward profile of having that exposure to significant upside as the Ethereum network gains network effect over time, but also not necessarily having as much risk of some of these other protocols which don't have so much development happening on them and potentially are more speculative bets here. So I did buy more Ethereum for this reason, and I bought more Ethereum, and then I also said, look, I'm DCAing here. I'm investing during times of extreme fear. That is my strategy. I do DCA consistently, but I definitely ramp up DCAs in times of fear, and I definitely ramp up taking profits in times of greed. And the other day, I saw capitulation like I've never seen before. I've seen sentiment like I've never seen it before. And I did take this as an opportunity to accumulate some Lido as well, because it fits this Ethereum narrative as well. It was very strong into the merge. Lido, being the major liquid staking platform on Ethereum, is essentially the #1 place that stakers will go to stake. If the Ethereum network grows over time, the amount of holders increases. It's only logical that these holders will need somewhere to stake. Ethereum offering advantageous staking rewards following its shift to proof of stake means that liquid staking protocols like Lido, even validated staking protocols like Rocket Pool, they do tend to capture upside from the influx of stakers. And that's why I did invest in Lido. I roughly went 80-20, so 80% Ethereum, 20% Lido. Obviously, Lido's much riskier. This was a very small nibble, but it was a DCA that I decided to make during this time. I think I got it at 90 cents, so I'm pretty well up on that. I did get lucky, well, not necessarily lucky because it is strategy based, but fortunate to catch that very kind of bottom wick. And also on Ethereum, I did get this around $1,000, which is nice. Anytime I can buy Ethereum at $1,000, I'll take it. Of course, we can go 600, we can go 700, but $1,000 long term, very good risk reward in my opinion. And that's why I bought some Ethereum. And I also bought some Dopex purely for the reason that I was underexposed to options. And I decided that given that I do believe in the option space, I thought this was an opportunistic time to start gathering some exposure to this sector. I did talk about it a couple of weeks ago, and I finally pulled the trigger on Dopex at a $38 million market cap. Fairly reasonable in my opinion, and this is kind of the biggest options platform, so it just made sense to start with the safer assets. By no means investing in a $38 million market cap project in this market can be considered safe, because it's not. It's risky. Small caps aren't necessarily in their ideal accumulation zones right now, but Dopex had been sidelining for quite some time. It did get hit down to 140, so I said, look, $140. This is the time that I finally add this to my portfolio. And then the last one I added is Matic. The problem I explained before of not really having great assets after Ethereum to DCA into right now, that kind of mentality did lead me to Matic, because Matic is one of the safer, or what I think is safer, investments in the market, considering the backing that they have and the partnerships that they have from, Reddit, Stripe, Starbucks, Disney, Meta platform. So on Instagram, they just have so many partnerships, so much usage, so many builders, not the best tech, but so much happening that it's very hard to see Polygon failing over the next few years. So I did finally get my exposure to Matic. I was waiting for quite some time, got in at 90 cents. That was one of the quickest bounces back up to 120. And I also shifted around some of my crap, so to speak. I took this as a time just to say, okay, let's clean up the portfolio. Let's get rid of some stuff that I don't have confirmation will be around in a few years, and put that into a quality asset like Matic. Because the thing you have to understand is now is the time where we need to be DCAing into assets that we can verify will be around in a few years, because the contagion from FTX, this is going to hurt a lot of protocols that don't have runway. This is going to hurt a lot of protocols that aren't prepped for the long term. And this is going to hurt a lot of protocols that rely on short-term liquidity. And Matic isn't one of those. Ethereum's not one of those. And I don't think Lido is one of those, because Ethereum staking is needed if the Ethereum network is functioning. So that's the reason why I did take a bet on those projects. Mind you, my Dopex DCA was slightly less than the others because it is options. And as we know, options is a long-term bet that is more of an institutional product than a DeFi product. So there's not really a rush with that. But I just, for my personal portfolio, I thought that I did need some exposure to options. So I did end up having, so I'm going to switch to my other screen. I did end up realizing Ethereum now is my biggest holding. And I did finally, my Ethereum holding finally overtook my Bitcoin position. I haven't been selling any Bitcoin during these times. In fact, I might actually DCA a little bit more, but Ethereum did become my biggest holding. And also, I did also increase my exposure to the L2s and the staking. So the entire Ethereum ecosystem is now my biggest position. And the small caps, I do think will have great opportunities to accumulate them, but I'm focusing on quality for now, given that there can be more downside, but I still wanted to DCA. So I went with some of the safer assets. But as I said, my job and my goal right now is to identify the protocols that can genuinely 50x to 100x next cycle. And that's something that I'll be sharing with you guys over time. And I will also be doing my portfolios on Nested, so we can start to develop some nice DCA portfolios. So I'm going to be creating on Monday my first portfolio, my DeFi portfolio, that you guys can copy and average into on Nested. As you can see, it's a nice platform because I can choose the allocations and you guys can invest. But I'm going to create a few different portfolios, probably a safer one, which may consist of assets like Bitcoin, Ethereum, Matic, some of these safer holds. Then I'm going to do a DeFi portfolio. Maybe that'll include like GNS, DopeX, some of the DeFi protocols I like, and then maybe I do a gaming one as well. And then you guys can kind of choose which ones you like, choose your desired kind of percentage allocation to it. And yeah, that kind of gives you a nice proxy to be able to invest in a portfolio that I may like. So make sure to check out and play with the Nested platform in the meantime. There's a link in the description because Monday we're going to get started on this. And it's going to be a lot of fun, I think, to start kind of getting our prep portfolios ready on Nested. And yeah, I'm pretty excited for that next week, because I do think, although this market is fragile, there is going to be amazing opportunities to accumulate in the near future. And I do think we need to be prepped for that. And that's why making and researching and coming up with these portfolios now, in my opinion, is a good idea. So that's all my thoughts for now. I will have more thoughts tomorrow, or maybe it's the day after when I do my next stream. But I think this is a good starting point. Hopefully you guys have more of an understanding about what happened with FTX, what my kind of mindset is on the ramifications, and also portfolio management strategy going forward. And going into the future, we will start to dig a little bit deeper here and look at some of the protocols that can benefit, maybe some of the protocols that are hit harder. And also I'm going to be moving my show style into a slightly different style, which I'm excited to reveal to you guys. Probably still a couple of weeks off, but we're going to be doing some really, really nice, highly edited, but deep dive, highly researched shows for you on some of these protocols. So I'm very excited for that. You guys may notice I'm in the suit. I'm going out for a nice dinner tonight. I think this is an ample time to start just touching grass, for lack of better words. But, you know, seeing family, spending time with friends. It's the weekend. Just take your minds off crypto for the weekend, and we'll attack this again on Monday. I think a lot of us need a break. A lot of us need some time off. Enjoy it wherever you may be. And then on Monday, you can attack this market fresh and ready to go. And until then, I will see you in the next video. Peace out.